initial public offering of SoftBank-backed e-commerce platform Meesho is set to open this week on Wednesday, the 3rd of December. The IPO is commanding a grey market premium of 40 rupees already. Taking into consideration the upper end of the price band and the current Meesho IPO GMP, the shares of the company are expected to list at 151 rupees apiece. Now, this is a premium of about 36% as compared to Meesho's IPO price band. Remember, the price band is set between 105 to 111 rupees per share, and the lot size of the Meesho IPO is 135 shares. A Meesho IPO is a combination of fresh issue of 38.29 crore shares and an offer for sale of 10.55 crore shares. The public offer is a book-build issue amounting to 5,421 crore rupees. Now, the Meesho IPO share allotment date is likely on Monday, December 8th. Now, credit of shares to successful bidders will be done the day after on December 9th, while initiation of refunds to unsuccessful investors will also be done on the same day. Now, shares of Meesho are set to list on BSE and NSE on Wednesday, December 10th. Remember, Meesho is a multi-sided technology platform driving e-commerce in India by bringing together 4 key stakeholders, namely consumers, sellers, logistics partners, and content creators. It emerged as India's largest, in fact, largest in terms of number of placed orders and annual transacting users among e-commerce players in India in the last 12-month period ending September 30th. Now, in FY25, Meesho connected over 5 lakh transacting sellers with 199 million annual transacting users, facilitating 1.8 billion placed orders. The company's net merchandise value grew almost 30% year-on-year to nearing 30,000 crore rupees in the last financial year, following a 21% growth in the previous financial year, that's FY24. And staying with the IPO buzz, home and furnishings company Wakefit Innovations is set to launch its own IPO on December 8th, comprising a fresh issue of shares worth 377 crore rupees. The IPO of the Bengaluru-based company will conclude on December 10th, and anchor investors will be allocated shares on December 5th, according to the red herring prospectus. The company's maiden public offering is a contribution of fresh issue of equity shares aggregating to up to 377 crore rupees and an offer for sale of 4.67 crore shares by selling shareholders. Wakefit proposes to utilize the proceeds from the fresh issue worth 31 crore rupees for setting up 117 new stores. It will also use 15.4 crore rupees towards purchase of new equipment and machinery, 161 crore rupees for expenditure towards lease and sublease rent and license fee payments for existing stores. Additionally, a massive 108 crore rupees is expected to be used for marketing and advertisement expenses for enhancing the awareness and visibility of the brand, and the remaining amount will be used for general corporate purposes. On the financial front, Wakefit reported revenue from operations of 724 crore rupees and a profit of 35.5 crore rupees for the first 6 months of this financial year, which ended on September 30th. Remember, Wakefit was incorporated in 2016 as one of the fastest homegrown player in the home and furnishings market in India. Its facilities are equipped with imported machinery and automation technologies such as robotic arms and roller belts, which streamline the production process and also reduce waste. Rohit, I want to just spend a minute also discussing the upcoming IPOs with you and what your advice to retail investors would be. Let's begin first with Meesho, and Meesho already commanding a grey market premium of about 40 rupees. Remember, the price band of about 105 to 111 rupees. Right now, looking at the GMP, expected to list at about 151. How bullish are you on this space? I don't want specific recommendation on this company from you, Rohit, but specifically the e-commerce space. We've seen the e-commerce space also get disrupted by the quick commerce space. So looking at Meesho right now, what is your view on the e-com space and your sort of word of advice or caution to retail investors looking at participating in this IPO?
So what has happened with most of the companies that have listed in this space is that they've actually seen a correction before finding a floor. The reason could be that valuations tend to be higher, many times 8 times to 10 times sales, and then market wants to really reset that before it goes ahead. So one thing is the trade, which means you apply for the IPO, you get a listing, you're able to get out on the listing and make some trading gains. So that's a strategy that a lot of people follow, which is fine. So you can continue to do that because this is not a market which is, we are not in a bear market where usually such gains get wiped out.
Right.
So you might still make trading gains, but when it comes to investing with a 2-year, 3-year time horizon, it's always better, I think, to let it get listed, let the market find its own level, and then consider investment from a long-term perspective.
All right, and Meesho continues to be one of those e-commerce companies which has not yet declared a profit. It in fact continues to take losses. I think a minor loss of about 35 crore rupees or so in the last financial year. But given the fact that investors, serious long-term investors, do look at profitability as a matrix, how significant do you think in this space of e-commerce is profitability going to be?
No, it is significant. See, everybody's betting on the idea that if you have a big market share in terms of revenue, then you'll eventually show profitability, something that Zomato had to go through. They got listed at a high valuation, then they didn't have profitability for some time, and now they started to show profits and the stock rebounded. So the initial listing is often happening on the market cap to sales metric, which means people are trying to price it between 10 times to 8 times the revenue that you're actually earning. But the question eventually is, are you going to show profits? Because if that doesn't show up, then you will actually see the stock getting hammered. So that is the serious risk in buying a stock simply based on revenue and market share.
All right, and a quick word on Wakefit. Wakefit has also announced that its IPO is going to open next week. December 8th will be open until December 10th. Now, we are talking about a company which is reporting profits, at least for the first half of this financial year. It has reported profit of about 35 crore rupees or so. So, again, you're mentioning consumer, consumption stocks, not necessarily FMCG. You did mention auto. What about, semi-durables as mattresses, home furnishings? How bullish are you on that space?
That's a continuation trend. So yeah, if you get if you have a boom in real estate, for example, then you do see a boom follow up in most of the consumption that happens behind real estate, whether it's tiles, whether it's home furnishing and so on. So it's really a call on what is happening at that level in the economy. But again, being an IPO, the attitude to the IPOs have to be the same, whether irrespective of the sector, that you're either playing the trading bet on the IPO or you're going to go for it long term. And longer term, you want the market to price it, settle it before you really jump onto it, because you don't know where they are in the earning cycle. Because a lot of earnings do happen close to IPOs sometimes, and it can lead to peak earnings being reported. That's again a risk. So there are various types of risks. I always prefer to let companies get listed before we take a long-term view.
All right, so no long-term view coming right now. Rohit Srivastava, thank you so much for your input on everything that's happening in the markets as well as this IPO frenzy that investors find themselves in. Thank you so much for your time this morning.